Hey, good morning, everybody. Happy 11th day of January. Having fun in the new year. Guys, do me a favor. Give me a Y in the room if you can hear me. Well, Alex, you just answered my question. Good morning, Alex. It's good to see you. Guys, I hope everyone's doing well today. Got some sleep, ready to follow some rules, learn some rules. Good morning, Tyree. We are going to have a good time today. I'm looking forward to it. Hey, Johan Jack, nice to see you. Guys, room has been amazing lately. Tons of positivity, everybody moving the right direction. Great questions, great posts. Let's keep that going today. Let's keep that momentum going. I am definitely excited about moving forward with this. But before we do anything, good morning, Carl. Let's go to Forex Factory and let's make sure that we're not going to put ourselves in the path of some crazy guy with billions of dollars reacting to news. I go to Forex Factory. I look for the different news types. There is high impact. These are the ones where I typically go grab a cup of coffee. Try not to put myself in the path of it. It can make the market move very erratic. We have medium impact. It can also be a market mover. Good morning. Hello, Safia. And then we have the high impact or the low impact news. This can make a difference. It depends on what you're trading. So being aware just that there's a news release, not necessarily what the news is saying, but know that it can create a little bit of an erratic movement in the market. So I like to check this every morning. I like to check it with you guys. Guys, today is Wednesday, January 11th, and at 10:30 a.m., crude oil inventories come in. I believe this is just a discussion about the reserves available. Excuse me. I apologize for that. I'm discovering that there's allergies everywhere. Um, and at 10:30 a.m., crude oil can move a little crazy. Somebody may react to that news. So if you're one of my crude traders, make sure that you're aware of that. I also have noticed in the past, this is just a little observation, that before crude oil inventories comes out, that 30 minutes before, sometimes people begin to jockey for position. Little speculation starts to take place. Um, I am a firm believer either my rules are met or my rules are not. But because I know that that can make things go a little bit irregular, I give them a little time to sort things out. So write it down on a piece of paper, put a note with Siri if you need to, and just know that crude oil is at 10:30 a.m. And then let's go into where you can find what you need, guys, and that's the education page. There's two sections that I like to cover on the education page. There's a software user guide, and this is your NinjaTrader how-to. And then there is the T3 Fibs ProTrader indicator tutorials. Guys, this is where everything that I talk about in this room comes from. We have zero secrets with Nexgen. Our goal is and always has been your success. So if you need it, you can find it either in the indicator tutorials or you'll find the same information. I'm not going to run through this one quite as extensively. If you open up your Discord and you come in, guys, there is a whole section on the educational outline. You could do this A to Z by yourself, but I can tell you that you're going to get it done faster if you do it with me, if you do it in the class and you do participate. But there's two resources there, the tutorials as well as the software user guide. And when you click on the software user guide, this is going to be really NinjaTrader how-to. As you get comfortable with the software, you need to also get comfortable with NinjaTrader. And this covers daily computer preparation, opening, closing your workspace, scaling your charts, setting up targets, setting up stops, resetting your simulator, market replay. On the 15th of the month, we're going to roll crude oil, so this will help you with adding symbols, rolling contracts, building new charts, chart templates, really just kind of a one-click stop. Just because the answers are here doesn't mean that you can't ask them in class. If you have a question, post it in the room. If I can't get you fixed, we'll send you to tech. Jason will get you fixed. If Jason can't get you fixed, well, then it just probably wasn't broken. One thing that I want to do is I want to click on this one, guys, your screen capture programs and how to share in class. Your ability to get feedback every time you do something revolves around your ability to take a picture. So I thought we'd do two things today. We'd open up Capture Software. Guys, do this with me. This is going to be a quick little tutorial. Maybe pull up your charts and click that red capture button. If I hover over just one chart, it is going to take a picture of just one chart. If I left click in the upper left hand corner, I can click and drag both of my charts, release at the bottom, and then it's going to give me this camera icon. And this camera icon is how we take that picture. So we can take a snapshot with the camera icon, or if you wanted to take a video of yourself trading, you could actually take a video while you take the trade, talking yourself through the trade. I love this drill. Maybe we'll practice one today, but for now, we're going to hit that camera icon, and up comes your image preview. And guys, you're halfway there. The picture is great. I'm pretty good at reading these indicators. I'm going to have a good idea of what's happening on the charts, but what I really need is the best information, you telling me what's going on, why you did what you did. You can do that with the arrow function. Maybe you're going to post arrows at specific spots. You could take shapes if you like, identify things. But then the most important thing that you can do is you can write your rules. Write your rules on your chart. Did you have strong triggers? Did you have no termination conditions? And then on your 5-1, talk about your entry conditions. Did you have an area inside of favorable large triggers? And guys, I'm giving you a little sneak peek on the rules for a trend trade. And then the most important thing that I think that you can add to your chart is, how did you feel? Were you nervous? Were you anxious? Because we all are in the beginning. Were you confident because you knew you were following your rules? If you'll give me this information every time you take a picture of one of your trades, guys, I'm going to give you the best feedback possible. So I'm going to upload this just like you will. And when you upload this, it goes to the screencast account right there to the cloud. I'm going to copy this link, and it's going to stay on my clipboard until I copy another. I'm going to slide this education room over so you can see it, and I'm going to post that link right in the chat room, just like that. And now I'm going to wait patiently for feedback. If you wanted to steal this picture, guys, this is a picture on how to annotate your charts. Put it in your spreadsheet, save it to your desktop, make sure that you're in a great position to give me the best information so that I can give you the best feedback. And then the next section that we talk about is the tutorial section. And this is honestly anything and everything that you could need is going to come from this section. It's going to start you off talking about your indicators, and then it's just going to move into your rules. It's going to go into a little next level step as you proceed through your journey. But I want to stop here. First 30 days and beyond, consistent trend trades, consistent winning trades for the first 30 days. If you focus only on 5-1 trend trades that happen after a termination condition on the 13-2 chart, this is your best chance of success. This is a high probability trade. And a high probability trade is defined as when each indicator on every chart agrees with the trade. And this is typically when your triggers are the strongest, no termination conditions exist, there's no trouble spots between you and your entry target. This is your first trade, your first 30 days. And I ask people to focus on this for 30 days, to allow it to be simple, to allow yourself to be new. Because by focusing on that trade for 30 days, and it's not really even 30 days, it's only 25 in class, it's going to teach you to read your charts. And this is the most important skill that a day trader can have. Because 90% of what we do is chart reading, and only 10% of it is trading when our chart reading has told us that we have the advantages we need. And your chart reading mastery incorporates 3 essential elements: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. You will be able to open up your charts and identify each of these areas through your chart reading. We're going to use the areas likely to continue for entries for high probability trend trades. You'll be able to use where it's likely to go for making educated choices about targets, and you'll understand where it's likely to stop. And this is going to be a great spot to recognize when you shouldn't be trading anymore. So 3 trading rules: high probability trend trade, learning to read our charts, and you're going to handle those 3 rules, excuse me, on only 2 charts. And these 2 charts are pretty simple to follow. The first chart on the left side of your workspace is a 13-2 chart. Your 13-2 chart it's a broad stroke of a brush. It's a slower chart. You're only going to use the most current bar to gather all the information you need to know whether or not you need to look for an entry. On the 13-2, if the background is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If that background is red, we're in a downtrend. You're only looking for rules to be met for high probability trend trades short. That's the first advantage you're going to give yourself, simply trading with the trend. Next, on the 13-2, you're going to look for rules 1 and 2. Rule number 1 says that you need strong trigger lines. Rule number 2 says no termination conditions. We're going to talk about these in great depth, but these rules must be met on the 13-2 before you ever move over to your 5-1, because your 13-2 is that broad stroke of a brush, and your 5-1, when rules 1 and 2 are met, are going to help you identify that best of the best area where the market is likely to continue. We're going to refine that broad stroke of a brush, and we're going to execute rule number 3. And rule number 3 is just going to have us entering the market. It's going to identify that place where it's likely to continue, and that's going to allow us to reduce risk, to maximize our profit potential. And we're going to use those 2 charts, and we're going to be able to identify 3 rules being met. Remember, the first 2 are going to be on that 13-2 chart. We're going to make sure that we have strong triggers, and we're going to make sure that we have no termination conditions, no areas where the market is likely to stop. When those rules are met, we're going to go to that 5-1 chart, and if we have it, we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. 3 simple rules on only 2 charts. And the way I like to think of rules, and the way I like you to think of rules, is each rule provides you an advantage. Strong triggers provides you the advantage of momentum, of a market that's likely to continue in the direction it's going. No termination conditions gives you the advantage of a clear path. And using that limit order to buy or sell a pullback at an area inside of favorable large triggers is going to provide you the advantage of an entry where the market is likely to continue. So while you think of your rules as providing advantage, it's important that you also think, good morning, K-Dog. What advantage are you giving away? What advantage are you willingly surrendering if you decide to break your rule? Are you willing to take a trade without momentum, without a clear path, without getting in where the market is likely to continue? If you're a brand new user, I hope the answer is no, you're not willing to. As you grow with the software, you're also going to grow with your ability to read charts, and then you're going to be able to take those trades where maybe you give up one advantage, where maybe one thing isn't perfect, and we call these medium probability trades. And these are defined as when most indicators line up for a trade. However, a small issue exists. The skills that you develop in the first 30 days, your ability to read charts, they're going to help you identify these small issues and make a good decision on whether or not a trade can still be had. And this is going to be the vast majority of your trades. John Novak put a great picture series in the room this morning that we're going to talk about. And when you execute medium probability trades, you're going to take the trades and manage them assertively. Your ability to read your charts is going to allow you to manage assertively. You'll take those trades, if there's trouble in your way, you may take a portion of the position off at that trouble spot, reduce the risk to a 0 loss level, And your chart reading is going to let you know where that trouble spot is. So high probability trades for 30 days. Learning to read the charts. And guys, then we're going to expand. You are going to grow as a trader. You're going to begin to recognize patterns, and you're going to kind of custom fit this software. It's almost like a memory foam. The more you get into it, the more it suits itself to your tolerances, to your needs. But first, we're going to learn to read charts, and we're going to do that by understanding the 3 basic rules. Guys, excuse me just one second. I'll be right back. All right, sorry about that. So we're going to get into the rules now. We're going to talk about the 3 advantages that you give yourself when it's time to take a high probability trend trade. And the first rule says we must have strong triggers. Strong triggers is going to be very easy for you to identify. Rule number 1 is without a doubt the easiest rule for you to learn, for you to master almost instantly. And it simply says that in an uptrend, when your background is green, the large triggers will be wide, angled in the direction of the trend, and your small triggers will be up and above those large triggers. And it's this space created between the two that lets me know that the odds are favorable for the market to continue up. That rule number 1 of strong triggers gives me the advantage of odds favorable momentum. In a downtrend, small triggers will be below the large triggers. The large triggers will still be widening, angled in the direction of the trend. And once again, it's that space created between the two that lets me know that the odds are favorable for the market to continue down. As a new user, you're going to commit to this odds favorable momentum because as those small triggers work their way inside of the large, this is what we call a weakening of the large triggers. And when we weaken the large triggers, anything can happen up or down. So rule number 1 gives us the advantage of momentum, and in an uptrend, you're going to recognize that that advantage isn't consistent from start to finish. There will be a point where the momentum is the absolute strongest from where the smalls separate and accelerate away from the large triggers, right up until they return and work their way back inside. This is going to be where you look for opportunities for high probability trend trades long. You'll see on a 13-2 chart, if you scroll back, these areas where there seem to be tails or wicks. This is where price is moved below the middle point of the bar. If you get in the habit of circling these tails with odds favorable momentum, these are potential entries on your 5-1 chart that we can recognize on the 13-2. Same thing in a downtrend. Smalls accelerate away from the large right up until they work their way back inside. You're going to look for your opportunities for high probability trend trade short within this range of odds favorable momentum. So do me a favor, give me a Y in the room if you're with me so far. Odds favorable momentum is going to give us the advantage of a market that is likely to continue. So far so good, right? Got all my usual suspects in here. I like that. I'm talking to my demos. I'm talking to my new people. You guys that are just starting, let me know that you're with me. This is a very important concept that we're going to work through. Guys, this is the S&P for the day. Not a lot of action today just yet, but it's a great opportunity for us to learn how to study a little. When I see odds favorable momentum, smalls above the large are wide, angled in the direction of the trend, and I see a tail, I'm just going to circle it. And what this is going to do is a couple things. It's going to help me identify when rule number 1 is met without any other indications telling me. And it's also going to let me know that these aren't going to happen every second of every day. 90% of what we do is going to be chart reading, waiting for that best of the best advantage. 10% of what we do is going to be trading when our rules are met. So far we have odds favorable momentum. Then rule number 2 tells us that we have to make sure we're not trading into termination conditions. There should be none present, or rule number 2 isn't met. So let's define termination conditions. It's a Fibonacci-based indicator that may reverse the market based on a comparison of that Fibonacci area and the T3 trigger strength and location. These areas can be Fibonacci support, Fibonacci resistance, yellow 1-to-1s. These areas can also be those cyan divergence low lines, magenta divergence high lines. Can be any third divergence in the same area. And we're going to talk a little more about this because this is going to happen on that smaller, faster chart first. And then finally, it can be a large chart midband if the large triggers are a full bar away. These are the areas that may reverse the market, that may give away the advantage of a clear path. Identifying them is really a pretty simple process that takes just a little bit of work, a little bit of practice, but it begins to get easier and easier. Two things have to happen in order to identify a termination condition. Whoops, haven't been on here yet today. The first thing is price reaches an area. I'm going to type this in. Maybe I'm not. Price reaches an area, meaning that the price bars make it to one of those areas that we just talked about. It can be Fibonacci support, resistance, 1-to-1s. In this case, price has reached Fibonacci support. So I go to the second step. Where are the trigger lines? Where are your trigger lines as price is coming into support? If your trigger lines remain above the area of support, then this area of support is likely to stop the market. Rule number 2 isn't true. Two-step process every time price reaches an area. When it reaches an area, where are the triggers? If they remain above support, support's likely to hold. We're no longer looking for short trades. You see it up top as well. Price reaches support. None of the trigger lines have made it through yet. So no short trades above, no short trades below. Our rules tell us, let the area break with odds favorable momentum. When is an area broken? An area is broken when the small triggers and the large triggers make it through the area. Support begins to act as resistance. Both sets of triggers have made it through. If there is odds favorable momentum, then it is go time for a high probability trend trade. So let's go look at a couple examples. I like this picture because it reminds us that price reaches an area. Here price reaches support, but then continues through, and those trigger lines try to follow. It creates a pivot, meaning that the market's gone from down to up, gives us that V. And this pivot creates divergence, meaning that there was a loss of momentum in the market. This is not a termination condition because we didn't have the two parts. I just lost my train of thought, guys, sorry. Because we hadn't reached an area. We had exceeded an area. So it creates a pivot. The market comes back up, and then it pulls lower. Now price reaches a cyan divergence low. I ask myself, where are the trigger lines? Trigger lines remain above. This divergence low now is a termination condition. In this termination condition, when price exceeds a little bit and the triggers can't, we call this a pivot stop out. It's a very powerful indication that the market may reverse. And there's a little note here that says when price trades below a divergence line and then back above, don't take any short trend trades. This pivot stop out creates a full reversal of the market. Your large triggers go from red to green. It ultimately gives you odds favorable momentum. This is what we call a strong bottom or a good bottom. This is the look that creates your best chance of success. We're going to see it from the top as well. Price reaches resistance. Where are your trigger lines? Your trigger lines remain below that area of resistance. No long trades. From resistance, price trades all the way back to support, all the way back to that midband. When price reaches the area, once again, where are the trigger lines? Well, they all remain above. No short trades, no long trades. Guys, 90% of what we do is reading the indicators, waiting for that advantage. And don't worry, the advantage typically comes. We just have to be a little patient. One thing I like to note here is when price accelerates all the way away from these large trigger lines, you'll notice that they just don't follow, that there was room for an entire bar, a full reversal bar, to get back to those trigger lines. This is that same look that lets me know that that mid-band is considered a termination condition. And it's almost like a vacuum. When price pulls away from those large triggers rapidly, it tends to snap back, and this is kind of the gap theory. If price pulls away from those triggers too fast and too far into an area, it'll snap back to the triggers. And it creates almost a vacuum to get us back in there. Good divergence pick on CL. Post it for us, Ron. Put you to work this morning. Price comes back to resistance, triggers remain below. It reaches that divergence high, triggers remain below. That next level of resistance, triggers remain below. Now we have a pivot stop out of a divergence high that gives us a full reversal, that gives us odds favorable momentum. Now we have a strong top. Let's look at that crude oil real quick. Ron, let's see what you're looking at. You are looking at the 5-1 chart, right? A couple divergence coming together, small triggers above. That's a great picture, and we're about to get to that one, recognizing it on a small chart. I want to show one more large chart, though. Thank you for that, Ron. This is my picture that reminds me the order of operations. First, I'm looking for odds favorable momentum. By this big yellow arrow, I have odds favorable momentum. I have small below the large are wide, they're angled in the direction of the trend. Everything suggests via those triggers that this market is likely to continue in the direction of the trend. But then price reaches one-to-ones. And I have to go through that process. Where are my trigger lines? Well, my trigger lines remain above those one-to-ones, and therefore this is a termination condition. This is a termination condition that gives me a full reversal. Smalls, but this one's not coming from a termination condition, guys. This is a pivot that seems to have happened in the middle of nowhere. You can use our next termination condition to help identify these turning points before you see them on the 13.2, and you do that with those three divergence in the same price range, may terminate the trend. And this is a very powerful condition when the third divergence happens with small triggers inside of the large triggers. If you see these three divergences, these three losses of momentum on your 5-1 chart, your small triggers go from odds favorable to anything can happen. This is a great indication that the market may be turning, even temporarily, maybe not from a fib, not from one-to-ones, not from divergence. It'll help you identify that change on the 13.2 a little bit faster. And as you work in the medium probability trades, you'll be able to recognize these losses of momentum with the trigger line condition. And this is going to help you manage those medium probability trades. And I want to show this with Ron's picture. Perhaps you were in a trade coming short, and you see that three divergence in the same location. You'll notice that the small trigger lines have gone above. This becomes a termination condition to help you identify termination conditions happening here. Even with that odds favorable momentum, three divergence in the same location gave us a push outside of where we would want the market to go to take a trade. So that's a great picture. And guys, this is how you're going to be able to manage those trades where maybe one small issue exists by recognizing change on the 5-1. This divergence becomes even more powerful if that third divergence is higher than the previous from a low or lower than the previous from a high. All right, so far we have the advantage of odds favorable momentum. We have the advantage of a clear path. Give me a Y in the room if you're with me so far. Two very important concepts to be able to recognize on your 13-2. And guys, now we get to the exciting part, the part that everybody wants. We're going to pinpoint with accuracy where that market is likely to continue, and it's time for you to learn how to enter this market, how to take a trade. Once again, I want to throw it out there. If you're new with me, guys, participate. Find your voice. The more you post in this room, the quicker you're going to get to where you want to be, the faster you're going to gain an understanding of the software, and more importantly, how to read it. So pinpointing the area, when the rules are met on the 13-2, when we have that odds favorable momentum, this one's in an uptrend. When we have no termination conditions, this is going to be your look on the 5-1. Everything's going to be going up. And you're going to focus your attention on the 5-1 large triggers. And if they are up and strong, meaning they're wide, they're angled in the direction of the trend, this is going to be your area to watch. And you're going to focus your attention and look to see if we have any areas inside of those large triggers. And I'm going to go back to the rules 1 second. That's not my rules. There we go. We're going to use a limit order, meaning that we're going to let the market come to us to buy or sell a pullback at an area inside of favorable large triggers. And those areas can be fibs, mid-bands, or 1-to-1s. Again, fibs, mid-bands, or 1-to-1s. And these areas need to be inside of your favorable large triggers, one on top of the other, trending strong in the direction. But our rules say we're going to wait for a pullback. And with everything going up with that odds favorable momentum, a pullback starts with a reversal bar. With all of these green bars, you're going to look for a red bar coming down. Or if we're in a downtrend, with all these red bars, you're going to look for a green bar going up. And at the time of this reversal bar, we're going to create a window of opportunity. The window of opportunity is the area where the market is likely to continue, and it extends from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers for a long trade for buying the market. If we were in a downtrend, we would be looking for that lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. And once we identify our window of opportunity, simply right-click and set a limit order, buy limit 2. And one of two things are going to happen. Either the market is going to retrace and fill you. You're now long at 79.21. You've bought the market. Looking at your potential Fibonacci areas for profit targets, your initial protective stop is going to go below that window of opportunity where the market shouldn't go. Because if the market exceeds that window of opportunity, then we no longer have that advantage of a market that's trending from where it's likely to continue. Notice the large triggers are surrounding those support areas, and my window of opportunity is within those large triggers. Guys, this is a long trade, and I'll take this trade 1,000 out of 1,000 times because I have the advantage of momentum. I have the advantage of a market that is likely to continue in the direction of the trend. Because I have the advantage of a clear path, there's absolutely nothing in the way on my 13-2 chart. There's room between my entry and my target. And I also have the advantage now on a smaller, faster chart of identifying where the market is most likely to continue this trend. This high probability trend trade, guys, this best of the best, your first 30 days, typically wins 70 to 80% of the time. Let that resonate for a second. If you're taking a trade that typically wins 70 to 80% of the time, you're being successful 70 to 80% of the time. That success is breeding confidence. It's getting you excited and it's keeping you focused on identifying advantages each and every time you get into the market. When this market begins to move in the direction of the trade, I can take my protective stop, move it below that reversal bar. I can reduce my risk. And because I waited for the market to pull back to me, I've increased my profit potential. So I'll ask one more time, guys. Give me a Y in the room if you're with me. In order to enter the trade, we must have strong trigger lines. Must have a clear path, no termination conditions. And then you're going to use a limit order to buy or sell that area inside of favorable large triggers. Guys, this is your absolute best of the best. We've already circled where we had this happening on the 13.2. We went through and took a look. Why did we circle? Well, we did this because this is how you're going to study. The repetition of seeing this trade over and over is going to help you identify the advantages almost instantly. It's going to help you understand if your rules are met. Remember, using the most current bar. If we scroll back, smalls above the large are wide, they're angled in the direction of the trend. Rule number 1 has been met. Price has not reached an area, therefore there are no termination conditions. If I see this tail historically, I circle it, just like we did this morning. And then if that tail, that circle, lines up with an area of support inside of favorable large triggers, well then I know that I have a rules met, 100% high probability trend trade. I can use a checklist to police myself to make sure that my advantages are there. And guys, this is how you're going to build confidence in the rules, through study. You'll notice that there is no divergence on this pullback on the 5-1. Everything is strong in the direction of the trend. I have odds favorable momentum on the 5-1. And guys, it's beautiful. I have a tiny little window of opportunity. All of these come together to give you a set of advantages to take this trade to help you realize success in the beginning. If we go back to our ES chart, there's one more circle for us. We have odds favorable momentum. And now we're going to look for termination conditions. We're going to look for areas likely to stop the market. And guys, I want to show you. Do you see how price pulled away and the large triggers didn't follow and price pulled right back up? I'm going to say dollars to donuts. There's a mid-band right here. You're going to be able to read your chart so well that you're going to start to understand what's there even when you don't see it. So let's put the rest of our indicators on. Let's see if I was right. Boom, right to the mid-band. Pretty incredible, right? Guys, I don't have this market up on any other screens. This is simply chart reading coming together. This is the S&P for the day, and look at this. Price comes from resistance to support. Fibonacci is powerful. Price pulls all the way up to resistance, and you'll say, but Mark, there was resistance twice. There was a pivot stop out. Well, look at the momentum present. This is one of the keys to getting to that next area, and price absolutely loves that next area. Pulls all the way to a mid-band, the large triggers don't follow, so price snaps back, and then finishes the move to fibs. Guys, is it just me, or is Fibonacci holding true everywhere? The only time it seems to be breaking is with odds favorable momentum. Doesn't quite make the next key area, pulls all the way back to the mid-band, large triggers don't follow, and it's beginning to head up again. So now, let's see what these circles look like. Let's see if we had some trades. Our first circle on the left was a beautiful pullback to an area of support inside of favorable large triggers. As the market moved up, you had approximately 5 or 6 points worth of profit potential until we get that second divergence with weaker triggers. Probably a way to manage out. Third divergence prints, we're not looking for that trade. So far, there's one. Looks pretty good. Follows the rules. Once again, we see it. Look at this pullback directly to support inside of favorable large triggers. An appropriate entry would have been 45.25, which means that this went almost 9 points before it even blinked. So guys, give me a Y in the room if you're with me. Odds favorable, no termination conditions. Look at this, absolutely beautiful. Pull back to the area of support inside of favorable large triggers. I'm going to take a picture of this. I'm going to put my checklist on it. And this is how I police myself, guys, and this is how you can present in the room. Is there odds favorable momentum? Absolutely. No termination conditions? None present. Area for entry inside of favorable large triggers? Absolutely, guys. This is your trade. 70 to 80% of the time results in success typically. This is based on Nexgen users putting us through the ringer, testing the theory. This is based on me putting us through the ringer through hours and hours and hours of study. So math people, if a trade typically wins 70 to 80% of the time, 20 to 30% of the time, we're going to gracefully allow the market to be wrong. 20 to 30% of the time, this market may go right through and hit a stop. That's okay, because we're trading a methodology that gives a proven advantage, that wins more than it loses. And you have to be willing to accept a cost of doing business sometimes, guys. Just because a trade doesn't work doesn't mean it was wrong. And that is where posting in this classroom is going to help you get over that hump. I want you to see this. I think I had one. Rules met. Odds favorable. No termination conditions. Pull back to an area inside of favorable large triggers. 100% rules met. The market just had other ideas for me. Trust in your rules is going to allow you to take that trade next time it sets up. Trust in your rules is going to make this one have no emotional impact. So study, circle, go through. You're looking all the time for those advantages. Smalls above the larger wide, they're angled in the direction of the trend. This is your first medium probability trade, guys. This is what we call a 50-50. Notice how 50% of your trigger lines are above, 50% of your trigger lines are below. When you have this look, it means that this Fibonacci area has the potential to break, but it hasn't broken yet. If I'm looking for a potential trend trade on my 5-1 chart, entry conditions should be ideal. There should be no divergence present, no loss of momentum. Your window of opportunity should be small, inside a favorable large trigger, strong in the direction. Here, your only area inside of those favorable large triggers is a mid-band, right down here at 62, right at the base. If no divergence prints, if we get the best of the best, some people will take an opportunity to take this trade. New users will probably say, well, the area hasn't broken yet. I'm going to get through my first 30 days so I can learn to read my indicators, so I can give myself the best chance of success. Neither is wrong, but it has to be what it is you're willing to do. For the first 30 days, and guys, I'm going to put this in the room for you as well. This is an example plan of how to stay focused in your first 30 days. All you're doing is defining your entry point, that best of the best area where the market is likely to continue. And I want you to own this. I want you to make this yours, and I want you to use that phrase. My trade is. What is it that I'm looking for? Well, my trade is the high probability trend trade. And in order to enter this trade, I must have the conditions of this checklist met. And guys, let me give you a copy of that checklist. There you go. There's one in the room for you. I must have odds favorable momentum, no termination conditions, and an area for entry inside of favorable large triggers. It also says, is the market coming from a good top or bottom? Guys, this one increases the likelihood of success. Remember, we talked about when you have that strong top, that strong bottom that creates the opportunity, that's your best chance of success. But it's not mandatory. It just increases the likelihood. If you check yes on each and every one of these, you're trading a trade that typically wins 70 to 80% of the time. You've identified the entry. And now you're going to take your pictures just like we just took, and you can put pictures of your absolutely best scenarios inside of your little trading plan here. Remember, we talked about the strong triggers. What does it look like? Well, I can take my screencast picture and watch this. We'll just paste it right in, and now I have a picture of my absolute best of the best, something for me to go back to reference. When you move outside of this high probability trend trade and start to work your way into a medium probability trade, well, you may say that there's some entry conditions that must be met when I fall outside of the best of the best. On a 50-50 trade like we just discussed, there should be no divergence on the 5-1. And then put a picture of that perfect entry, maybe small triggers outside of the large. Guys, this is your best of the best. This is your first 30 days. This is maybe your next 30 days. And all you're doing, and it's important that you recognize this, all you're doing is identifying entries, because if you begin to take the best of the best entries, it makes a trade manageable. It makes profits easier to realize. It makes risk easier to reduce. Every time you take a trade, you take a picture. Every time you take a picture of that perfect rules met, let me go to this one. Nexgen provided you with a tracking sheet. It's in your Nexgen Study Picks folder. This tracking sheet is your trade journal. If you spend any time trading the markets, anybody and everybody that tells you along your learning path you should have a trade journal of what you do, this is exactly what you've been provided. Your first page is where you're going to track anything and everything that you do. Every trade that you take goes into this spreadsheet, just like this. My rules were met. Here's my trade. And then I'm going to put, how did I feel? I felt scared, relaxed, frustrated. Every time I take a trade, it goes into this sheet. And what this is going to do for you is you're going to be able to identify the patterns that are bringing you success, but you're also going to identify patterns in yourself. Maybe you trade into termination conditions. Maybe you're jumping in early. Maybe you're getting out late. All of that goes on this first page. And then as you begin taking pictures of the absolute best of the best, you're going to fill up this personal trade setup book. All you're doing is identifying entries. These are the pictures when my rules are met and I took an entry. Put it in this green section. And then the best part is as you go on your study journey, as you do this maybe after hours on the weekends, we've also provided you almost 70 pictures of high probability trend trades when the absolute rules were met, and you can compare what you're doing to what you're seeing here. That's the first step. The second step is learning to manage. And as you learn to manage, keeping it methodical and mechanical is typically the safest approach for new users. This is where most people tend to lean. And this is the most mechanical, methodical approach I've ever seen. So I put it on this example plan so that you'd have it available. I will trade 2 contracts, and my initial stop will be 12 ticks above or below the window of opportunity. My only stop movement is based on where the window of opportunity is and not on my emotions or my fears or my opinions. I'm going to move that stop 2 ticks above or below reversal bar in the direction of my trade. That reversal bar must happen for me to move the stop. And I'll take profits on my first contract at $100. And at that point, I'll move my stop to break even. Very mechanical. Why $100? Well, because $100 is a win. And a win creates a dopamine response. You begin to get excited, you get happy, you like that. But more importantly, having that $100 in the bank lets you hold your second target for 200 because you've already been paid and you have nothing to lose. This is going to help you squash that little emotional response in the beginning. So you're either going to take a $300 trade if both targets are hit, or you're going to have a $100 trade, break even, or you're going to take a loser because you followed the rules but the trade didn't work and you got part of your 20% right off the get-go. These are your options in the beginning, guys. This is your best of the best approach to focusing on those rules, to focusing on giving yourself the best chance of success. Here's a copy of that example plan. Feel free to write your own plan. I always encourage that. I love to see that. I'm going to save this. And guys, that's the first hour. That's what we do for the first hour. We're going to talk about the absolute best of the best. And guys, there's that 50-50 trade. Smalls had broken through, the large had not. We knew the market was likely to pull back to those large triggers. But look at the loss of momentum on your 5-1. Those smalls aren't outside. The market tries to push back up with that momentum. Now the divergence is printed. The conditions have changed. Your sets of rules are going to help you identify and stay consistent and typically keep you safe. That's what they're designed to do. And there's crude oil going as these guys start looking for opportunities. A lot of momentum into the area creates a bounce. The area tends to break. Coming through here, we had a little odds favorable. Pulled back to, well, not the best look on a 50-50. Sometimes it's just not our trade. Guys, I'm going to scroll up and I'm going to start looking at some of the stuff that you guys have posted in the room today. This is the second half of class. The first half is identifying your rules. The second half is seeing what you're doing and offering feedback. Not a lot of rules on this one, but this also comes from someone who spent 27 years reading the charts. Support is hit. Guys, look at the distance back to these large triggers. This is an area likely to stop the market. Excuse me 1 second, I'm going to sneeze. Apologies if you heard that. Where does picture go? Support holds, support holds. This is a termination condition, likely to reverse the market. This is a different style trade. This is a momentum trade. This is a trade, one of those medium probability trades that you may work yourself into. Allowing these areas to hold, if I can't go short, looking for opportunities for long, looking for those small triggers. This is beautifully executed. It's a very low risk trade. And it has very detailed exit points. And there's not enough strength to hold on for the retracement. Beautifully executed, great chart reading. Second attempt, very little risk. If it closes below the triggers, it'll be out. Guys, this is exactly how you're going to post in the room. Tell me what you're doing. Tell me what you see. Show me your entries. Show me where your exits are going to be. This is beautiful chart reading, great execution, and you'll notice that there is zero hope in here. Everything is very pragmatic, determined. He knows exactly what he's doing, exactly where he's doing it. And that comes through repetition, guys. That comes through spending a lot of time working through things. And he's out at a potential trouble spot rather than holding on and hoping for the home run. He's taken a lot. Thank you for that, Ron. He's taking very calculated, medium probability, understanding the potential risks, the limitations, quick execution, Guys, take your money out of the market. The whole goal is to get paid. Every trade doesn't have to be a home run. If you're a crude trader, we talked about this one, didn't we? Odds favorable, no termination, absolutely beautiful pullback, right to support with everything going up, with every trigger in favor, and that market ramped up. Beautiful look, beautiful trade. As we trade into resistance, 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 resistance. Fibs and divergence on the 5-1 all charts. This is a precursor to what can be a very strong top. Notice that there's no trade to be had here. This is simply a picture of charts reading what you're doing. This is rule number 2. Rule number 2 says you must have a clear path. That clear path has been taken away on these particular charts. Let's see what's next. John putting on a clinic today. So in that same situation, guys, this is what I was talking about, high and medium probability. This is a perfect trend trade look. I'll put this one in the room again because it bears repeating. Strong triggers. Look at this beautiful perfect entry on the 5-1. If it goes up and breaks the highs, the trend will continue. But rule number 2 says do not trade into any Fibonacci areas that are expected to hold. And the note on this one, the market will train you to do the wrong things by occasionally showing you a winning trade that you will normally lose based on the rules. This is an example. This trade should win, and if you did it, you broke the rules. If you broke the rules, you're practicing long-term failure. Use the term, guys, this is not my trade. My rules aren't met. Self-talk, reinforcing. Positive rule following is very important. Never say, man, I should have taken that. Why didn't it just go? These are negative self-talk things, guys. These are going to ruin your ability to follow rules. Very simply, the rules are not met. There is no trade to have. Not for a brand new user. And then the next picture that he posts is when you gain experience, when you begin to understand the risks associated because you have those repetitions, you may say, I'll take this trade with this much momentum coming from a great bottom, and I'll manage it accordingly at that trouble spot. So 2 sides of the coin. In the beginning, be strict, follow your rules. You have to learn your rules so you know when you're capable of altering your approach a little bit. So I love that picture. And then here's a picture of that same one. This one went up. You'll notice that we get the second divergence. It's still not a breakout of that Fibonacci area. The market is fighting at these key Fibonacci areas. And it's not our job to decide whether it's going to go up or down. It's just our job to go ahead and determine if our rules are met or our rules are not met. Guys, this is the great stuff that you're going to get every day in this classroom. You're not only going to get the rules from me, but you're also going to get a lot of feedback from John Novak, who likes to come in here to talk about what he sees, what he's doing, and help you become a stronger, better trader. Gary posted a picture in here. Let's see what happens. Smalls have broken through, the large have not. This is one of those 50-50 trades. There is divergence on the 50-50. Gary's rules say, you know what, I'll go ahead and take that trade. Takes it, quick profits, doesn't lose money on a 50-50 with divergence. Gary, you didn't get a market flow signal. You broke your rules. Checklists are great, guys. If you're not going to follow your checklist, it doesn't do any good to post it on the chart. This is a challenge that I've had before. 50-50 trades with divergence on a 5-1, use a market flow signal. That market flow signal never came in. John Novak again. Divergence at 50-50 says no more up. Good chart reading. Both triggers roll down. It's probably going down. So determining when an area is going to hold. The first look is your 13.2, guys. The 13.2 says we have a 50-50 at an area. And then your smaller, faster chart begins to show you indications that that area is likely to hold. Your 8-range chart will also give you those indications. That's a great chart reading pick. The area does in fact hold. Excuse me. Trades down to support. And this is that same picture. Where is it? The same picture. The market is going to do its best to train you to break your rules. Rule number 2 is not met. It looks absolutely beautiful, but because rule number 2 is not met, you guys that are following rules 100% like you should be are avoiding this trade no matter how pretty it is. And John even said he didn't break the rules and go short. It's not a great top. Earl, let's see what you did, my friend. Earl said, you know what, with that momentum, I'm willing to break rule number 2. And I like that you did this, because this is a great example of how everybody's going to have a different plan. Odds favorable momentum, without a doubt, but we've reached that termination condition 100%. Earl, you see that, right? Picture perfect entry. You said, you know what? I'll bank on that momentum getting me back to the low, and it did. Great chart reading, Earl. Nice trade. Beautiful execution. By waiting for that market to come back to the best spot, you had a very low risk opportunity to make that money. Well executed. And let's see, did that termination condition hold? It is still holding, isn't it? Guys, I'm going to take just a minute. I'll leave you with the S&P. When I come back, we'll talk about really anything you want to talk about. If you take a trade, post a chart. If you have a question, post that question. I had a picture for that. If there's something specific you'd like to talk about, let's talk about it. There's nothing out of bounds on this one. Guys, watch your S&P for a little bit. We'll see if that termination condition decides to hold or not. That patience piece. I'll be back in just a few, and we will resume. Alright guys, I am back. Let's get into that second hour. So how'd that termination condition do? Love it when the market helps me teach a lesson, guys. Price reached an area of support. Absolutely none of the trigger lines were able to break through. We also got to see that divergence come into play, right? The first one came in, there was no divergence. It pushed right back up to Earl's perfect entry. Comes right back down to support. Divergence shows us a loss of momentum. Those buyers push back. We get a second higher divergence. Smalls are on the wrong side of the large. Guys, let's take a picture of this one, because this is a look that ends 50-50 trades. We'll call it that becomes a management opportunity. If you identify in that smaller, faster chart, that second loss of momentum, those small trigger lines go in the other direction. Yeah, this is John Novak's momentum look long. Not quite, because there wasn't a full bar yet. Guys, this is a great look. You're going to be able to read charts so well that you're going to be able to identify these. And then John's momentum look, when a full bar prints from that termination condition and it snaps right back to that mid band, this becomes a great entry, momentum style, to get up to that next key area. So identifying where the market is likely to stop, identifying that change happening, and then looking for opportunities based on patterns to take that market up to the next level. Seeing the same thing on this side, guys. Price pulls down through the areas we've broken through, and then it pulls all the way up to the mid band. You'll notice that the large triggers are unable to follow. When the large triggers are unable to follow, price snaps back and comes right to that key area. These are patterns that you're going to see over and over throughout the market. Couple divergences, there's that same look again, lets you know that the market is likely to push higher. The market pushes higher directly to a mid band. That's a termination condition. And then the market comes crashing down. All right. A lot of great chart reading lessons today. We're looking for those opportunities, waiting for rules to be met. So what do we see here? Price reaches a divergence low. Guys, price reached it to the absolute tick, right? 100% spot on. Where are your trigger lines? Well, your trigger lines are all above the area. Therefore, this is a termination condition. What else do we see on our 13.2? Let's do some chart reading, guys. Every time I look at my charts, I just start talking. Price reaches, no triggers through. I know that I have a termination condition. I need to reduce that font size a little bit because I don't like. So I know that I have a termination condition. What else can we recognize on this? Even if we were thinking short, smalls are on the wrong side of the large for shorts, aren't they? So smalls are on the wrong side of the large for shorts. And I don't have odds favorable momentum for longs. That's it, guys. This is a go make a sandwich. This is the nothing to do based on the 13.2. None of our rules have been met on the 13.2. Gary, you say a bottom is setting in. All right. It has the potential to, doesn't it? But couldn't we have said the same thing right here? Could have said it about a top here. One of the great things about having rules is that you don't have to guess. What's that 21 say, NG time? So let's, NG said that 21.3 still says down. I don't disagree. So what do we have on the 21.3, NG? We have a 50-50, right? Good morning, Ed. Half of our small triggers have broken through, but our large triggers have not. So if we go down a chart, we have a termination condition on the 13.2, right? Isn't that the same thought process? If we have a 50-50 on the 13.2 and our 5.1 says that it's not clear, we should probably hurry up and wait, right? Let that area clear, guys. Two things are going to happen here, or one of two things. Either the 21.3 is right, and we're going to continue down, but guys, if the 13.2 is a broad stroke of a brush, the 21.3 is literally painting the desert, right? Change is going to happen so slow on that 21.3. So we identify a termination condition. What if these trigger lines roll and we get odds favorable momentum and we're clearing? Stay in the moment. If you're a long-term trader, if you're holding for giant moves, you are in at 45 and now you're looking. The overall is down for sure, but it's also, and NG, I want to point this out. This is not a good top, right? Guys, this is just a pivot from the middle of nowhere. Has anyone seen that pattern that when there's a pivot from nowhere, price loves to make it to that next area? So I have a bad top on the 21.3 with a 50-50. If I bring it down a level to my 13.2, I have a termination condition with a trend change. And then if I bring it down even more, now I have three divergences with the smalls inside. I'm not saying that there's a long trade to be had, but there's certainly not a short trade to be had. Would you agree? 90% of what we do is going to be reading our charts looking for an advantage. Pretty cool, right? You can add any time frame you want, but the chart reading remains the same. This is what I see, this is what it means, these are my rules. If you went short here based on that 21.3, you probably lost your money because it means that you had to ignore a termination condition here. Guys, give me a Y if that makes sense. Opinion is the most expensive word in trading, without a doubt. And guys, you're going to start to recognize this stuff faster. You're going to start to identify this change. You're going to be able to look at your charts pragmatically. I'm reading my indicators. I'm not hoping. Look at your triggers on the 5.1. It's just flat, isn't it? Lifeless. Don't have odds favorable momentum. I can't go short. It's too soon for longs. Stay patient. The opportunities will present themselves. Wait for your charts to tell you that you have an advantage. What's that overall look on the ES? Here's your 21.3. Pulled right back to support, likely to hold. Can't go short. Too soon for longs. But the market sure does like to finish a move. We'll see if they get to 36.98. They've got a lot of work to do. Going long to try to get there right now, financial suicide. There's a divergence. There's a lower divergence. So we begin to play the game of if then. If this support breaks, we'll look for opportunity short. If this support continues to hold, we know what has to break to begin to look for those trades long. You guys, this is what we do each and every day. And crude oil hasn't made it through that termination condition yet. So guys, while we're in a holding pattern everywhere, let's do this. Just for grins. Whoops. Let's take a look at this picture. Your step-by-step path for becoming a confident trader ASAP. Should be your goal if you're in this room, becoming a confident trader. The first step, here in bold and blue, is post your trades in class, guys. Can't stress that enough. I almost feel like I beg people sometimes. Post your trades, post your trades, post your trades. If you do something, share it with me. If you see something, the conversation that we just had here, do me a favor. Let me know that you can do this. And I know that there's a lot of you that have never posted in this room. If you're still learning the software, take this picture, use your call out button, and write no shorts into termination condition. You can even spell it correctly if you like. And once you take that picture, guys, you can right click and copy. You can upload it to screencast. Post it in the room for me. Let me know that you can do this part of it, because that is such an important part. And then track your pictures, track your trades in that performance spreadsheet. Every time you take a trade, put it in that spreadsheet, annotate that chart. When I began trading, guys, when I started learning the software, my spreadsheet looked like this. Traded into term, loss. Traded into term, loss. And guys, I probably saw 100 of these. And I spent my first 3 months not posting in the room. And once I finally started posting in the room, once I finally started to get help from the coach, John Novak said to me, "Hey, silly, you keep trading in determination conditions hoping for a different outcome. You've lost 70% of your trades in determination conditions. This is your pattern, Mark. This is the feedback that you need. Stop trading in determination conditions." We recognize a pattern in me. So I started taking pictures. Guys, this is a new spreadsheet. I filled up the termination conditions section 10 times over. Every time I took a picture and annotated a chart, I wrote whether or not a termination condition was there. Absolutely. So let me go through this, NG, and then we'll hit it. You're going to learn the trigger lines when it's okay to trade, right? Learn your rules, write your plan. This is what you're going to do. Ed, you only posted winners at first. Felt good, didn't it? Look at me posting winners. Man, I was the same way. And I held off on like 10 losers. There you go. NG, John just gave you the, he just taught you to fish. We'll go through it if you still need help putting it on there. No worries. Simulate your trades, guys. Post in class. Don't practice the wrong trades. Keep it simple. And then do that market replay after class. Retrade your day. Fix your mistakes. Take pictures of the correct trades. Get them into that classroom and repeat this process every day until you're always taking the correct trades. Tyree, let's see what you got. No shorts in determination conditions. Amen, right? Tyreek, I know that this was just doing it because I did it, right? I know it's weird. I'm not used to that. I appreciate it, though. Because look what we did just by you doing this. This silly little exercise turned into an amazing reminder for you that when you're looking for the trade, remember that pullback is your friend, right? That pullback gets you to the best of the best area. That pullback gets you to where it becomes manageable, to where you have more opportunities. Had you traded the mid-band, Tyree, you had over $100 in profit to get to that first trouble spot. Pretty cool, right? So just by this, and I appreciate that you did that very much, we get to have a reminder that rule number 3 is going to make your trades manageable. Great job. Thank you for that. Boyd, nice to see you. Let's see what's going on. Strong top, no termination condition, odds favorable momentum, pull back to the fibs and the large triggers. Guys, there's that momentum trade. Great termination condition, smalls begin to break up, triggers begin to roll. Boyd, that's perfect execution on what isn't a high probability trend trade, but is an absolutely beautiful shot at recognizing that bottom. Strong top, triggers roll, odds favorable. No termination, or in this case, does resistance act as a termination since the triggers have not crossed? So Boyd, this is a great question. And Boyd, this is one of those 50-50 trades. And when we talk about the 50-50 trade, it hit your stop and then ran down, Tyree. That happens sometimes. This 50-50 trade, I'm going to annotate your chart for you a little bit as well, and this will help you so that you can put this into your spreadsheet with the answers. 50-50 means that smalls through, large not. I need to whittle that down a little bit so that it fits. This means that the area is not broken, but has potential with that momentum. Look for the perfect entry on the 5-1, and this is the most conservative approach. No divergence. Strong triggers, small window. So what you had on this one, Boyd, I hope you're still with me here, is you had one trigger line flat. So we'll call that no strength. And then you had one trigger line down. So you picked your spot well, but Boyd, one of the great things, I think, and it helps us from the safeguard, is when you lose momentum, and look at the distance back to your large triggers as well. It's almost a full bar. It just becomes problematic. Split triggers, divergence, and a big gap back to those large. This is one that if you go back and you study this look a couple times, you'll learn to avoid this trade, because it becomes much lower probability. And there's a picture of it for you, so you can go back if you want to put that into your spreadsheet, a little extra annotation for you. Thank you for posting, guys. Every time you post, not only do you become a better trader, I become a better trader, and I appreciate it. I'm a little selfish like that. Tim, nice to see you. Let's see what you're doing. Let's see if we can reset the zoom on this one. There we go. So let's see what we have. We have that support, right? The smalls coming up. 21.3 has a look for shorts. How and when do we use the 21.3 versus the 13.2? Tim, this is a great question. Grandma's getting the Hoover out. I love it. So Tim, let me pull up that same one on the ES, right? So here's our S&P. What does our S&P say on the 21? It really says that support's likely to hold, correct? But we're in a downtrend on the 21. Smalls are below the large. We've had divergence. Can we agree that we're not really getting any help from a momentum standpoint on the 21? So the only thing I'm really going to use this 21 for is I may say to myself, this is a trouble spot, big time with that look. Support's held, things are kind of going up, there's a trouble spot, I don't have momentum. Well, what does my 13.2 say? My 13.2 says termination condition. Tim, I'm not getting help anywhere for this. It has the potential for longs. What has to break for us to go long? We have to get through that termination condition. We have to say to ourselves, man, I'm not trading into this area. What's it look like the market's doing right here? So resistance tries to hold, support holds, resistance holds, support holds. Now we're back into. What we're doing is we're watching those deep pocket people come through. And if we're looking for a tiebreaker, whoops, we say, man, let's use the 21.3 for a tiebreaker. It's given us absolute nothing, right? 21.3 says don't trade into that termination condition. So Tim, if I'm looking at a 50-50 or something like that, and I want help from my 21, that's going to help me on a 21, isn't it? Odds favorable, nothing in the way. Maybe I have a 50-50 trade on my 5-1 or on my 13.2. This is going to help me identify. Maybe I have a 50-50 trade into this area. That termination condition on the 21.3 is going to say, man, don't take that 50-50. Does that make sense? I try not to read into the 21 too terribly much. But if there was odds favorable momentum directly into this one on the 21 with a clear path screaming like a banshee, I might take that 50-50. But we didn't have it. Awesome. I'm glad you asked too, Tim. Guys, I don't always think about everything to say. So if you ask that question, we're going to have some great conversations. Gary, and Gary just said it, crude oil inventory is out right now. Gary looking for the HVA, right? Termination condition, triggers roll, 3 divergences, starting to say up. Didn't get that trigger roll yet here to feel good about it just yet. Great chart reading, I think. You're recognizing that potential change, but why not give it a little opportunity, clear that spot, get those triggers above that potential termination condition. If you were going to take this one, that was your place to take it, but you're taking it with the understanding that that's a pretty good trouble spot, that mid-band's a trouble spot. Termination, termination, termination. That was your one, Gary, if you were going to take it. Dave B. Glad I finally figured out how to do these. Resistance, strong triggers, into a mid-band, not really a termination condition. Love your entry, Dave B. Market comes all the way down to a termination condition. Certainly a great place to take profits. Dave B., this is a great trade. Odds favorable, right? Haven't reached the key area. And I'm going to agree with you 100%. I think if I'm in this one at 59.50, I'm taking those contracts off at 54.50. That's 15 points. 15 points in the bank, right into an area with the potential to stop the market. Nice trade, Dave B. Tighten up that management a little bit, and it's going to be rock star. Appreciate all the pictures, guys. John Novak put one in. He says no reason to pray for target 2. Taking the money, target 1 is easier. Absolutely. If you take that momentum up, he's identified his trouble spots, and he says, I'm in this to make money. I'm not in this to look cool. Take the money, wait for the next one. Gary, 50-50, divergence, not waiting for the market flow signal. You get in on a down bar. Great management, great trade. Claire, let me address Gary real quick. Gary, do you realize that this is the second time today that you've broken this one? You've marked yes when it wasn't true. And I'm okay with that. Your trading is your trading. You can do what you want to do. But if you're breaking your own rules, don't try to convince yourself that you're not, because you're going to start breaking more and more of them. Claire, are you using TechSmith Capture, or do you have Snagit? You have Capture? So in order to do, Gary, negative 106, right there. Divergence on the pullback. You see it? Here you go, Claire. We'll do Gary's chart just to show you. So on Snagit, if you take that picture, Gary, there's your divergence right there into the trade. That one isn't true. With Snagit, Claire, I can take those rules and pop them right on there. It's a $63 investment. John, I'm not saying that it wasn't a good trade. What I'm saying is that his rules on his chart said don't take it without a market flow signal. He broke his rules. I'm just helping. I like the trade. I'm not anti-trade at all, but I'm very much pro-consistency. So Claire, I can do it off of Snagit. And I think that Snagit's worth the investment personally. I don't work for Snagit or TechSmith. But I think if you go to TechSmith and you go to products and you go to Snagit, it is maybe $63. Yeah, $62.99. And at $62.99, you get all the bells and whistles, you know. So there's a link to it if you want to look at it. So Gary, if we look at your charts, let me figure out where I put it. And again, Gary, I'm not knocking your trade. I think what you did is nice, right? I think it's a great trade. You've got a bottom that held, everything's up, tons of momentum, every chart screaming in the direction, small triggers are out, small triggers are out. Man, if you're going to take a 50-50 trade, Gary, this is an amazing look. The only thing that I was saying, and guys, I want you to know this, your trades are your trades. But the only thing that I noticed, Gary, is this line right here, where you said on 50-50 trades, if no divergence, enter with the 5-1, and I think I cut it off. And then below it, it says, if there's divergence, wait for a market flow signal, right? So just per what you typically write on there, you would have been waiting for a market flow signal. But if we weigh the advantages of this trade, Gary, you absolutely nailed it beautifully. I mean, this is a phenomenal looking trade. Hey, good morning, Nexgen Ben. That's up to you and your plan, Gary. On the example plan for brand new users, And guys, remember, Gary's saying, based on that strength, I don't need a signal. Gary, I would agree with you 100%. But if you're brand new, you may start with, because this is a new person's class, you may start with no trade, and then you may move that to wait for signal, and then that probably works into, I'll let my chart reading determine if I have so many advantages, I'll go. So in the beginning, maybe no trade, and then waiting for a market flow signal. So let's look at that for Tim. And then Gary, what you did is you recognized so many advantages. No, you don't need a divergence, Gary. Divergence meant that there was a slowdown on your 5-1 as you pulled into an area that hadn't completely broken. Does that make sense? Because if you go back and study 50-50 trades with divergence, it's less than, the winning percentage is certainly less than that without divergence or with a clear path. So in the spirit of helping the newer folks, this divergence may be a detriment because you don't have, well, let's talk about that then. Let me show Tim a market flow signal. In Tim, it's nothing more than a confirmation tool. Here we go. We have a live example. Let me pull my market flow chart over. So Tim, you see what's going on right now? We have a 50-50, right? Smalls are through, large are not. Here's my market flow chart. If I'm saying, in order to take this trade, I want a market flow signal, first I have to identify my window of opportunity. Where is this trade most likely to come from? Well, areas of resistance inside of favorable large triggers. So on my 8 range chart, what I'm looking for is my market flow to give me a signal to initiate the trade. Technically, the small triggers aren't through those 1-to-1s. Whoops. So here's my window of opportunity. And in order to take this trade, I may say to myself, I need a market flow signal. Meaning, I need a reversal bar with an arrow above it to the downside. I need an antenna bar to the downside, or I need a yellow reversal bar to the downside. So if we go to the manual and you go to that market flow volume analysis, you'll notice that it says when trend trade rules are through, when there's no termination conditions, when there are odds favorable momentum. And then when you come through this area even further, Tim, there's going to be a visual representation. What do those signals look like? It looks like a green arrow for a long or a magenta arrow for a short. It can be an antenna bar for a long, antenna bar for a short, a yellow paint bar. And you'll notice that at this best of the best area, termination condition, we would be waiting patiently for market flow, if the rules are true, to give us a signal that says, take a shot at this area that has the potential to break. That's a reversal bar, but that's not a market flow signal. And again, we don't have a clear path here. Does that make sense, Tim? You have to follow the rules, identify your window of opportunity, and then you can use market flow for a little bit of confirmation. There is not. So market flow signals defined. I'll show you a picture of each one. It can be it's a little sticky here. If you're looking for shorts, one of these yellow reversal bars would have been a signal. See how the high volume area is away from the body and the body is below Tim? That's also what we call an antenna bar. That could have been a signal, or a magenta arrow. And then the same thing going opposite, a reversal bar, a green arrow. We're looking for one of those antenna bars to the upside, which I don't see on this particular screen. It's a reversal bar. It's a reversal bar, but the rules have to be true. And now look what's happening. You didn't have a clear path, right? You didn't get the market flow signal. We just got a higher divergence with the small triggers inside. And you probably just got stopped out of that trade if you decided to take it. So market flow can be a confirmation tool. And since we didn't get confirmation, since we didn't have a clear path, look what the market's doing. Pretty amazing, isn't it? Termination conditions, guys. Respect them. I love it. I love it when the market gives us live examples. It doesn't mean that the market's not going down. It may. But at least we have an indication, a recognition that it might have some stuff to do before it does. It's a breakout bar. Sometimes if you see it going into an area, it's helpful. If you see it coming off of an area, Tim, if you go through the link that I posted about market flow analysis, watch that video. This will answer 90% of the questions that you have with it. But I think that the key, and this is for you and everybody, in the beginning, use it as a confirmation tool when rules are met. And then what's going to happen is as you use it as a confirmation tool when the rules are met, you're going to begin to recognize those patterns just like we do. It's hard to make the application. So try this. When the market reaches a termination condition, let's see what our 8 range was doing. I like these conversations. I think these are fun. No real indication at the area, right? But then we get another down bar and we get what's a breakout bar. This is all sellers. Look how that magenta highlight comes from a termination. Now we get one of those centralized areas. And you get the same thing from that termination condition. Everything pops up. Rules not met, ignore a signal. Rules not met, ignore a signal. It's only confirmation. If you try to gauge what's going on based off of random signals, you're going to get in trouble. But Tim, what we see here is a reversal bar with a breakout bar. And notice how this reversal bar with a breakout bar creating a high volume area. This was the beginning of the bottom. So you'll start to create a correlation in your mind as you go through it. On this 50-50 trade, or that one that didn't quite make it through, you had an antenna bar, and it pushed you all the way back down with that momentum everywhere, right into that key termination spot. So it can become helpful. But here we just have rule number 2, termination conditions winning. And you see this when the market consolidates. It'll try to give that good push. We don't get a clear one. And now we're going the other direction. I think that's a great question. For me, Tim, confirmation was key at first. Waiting for that confirmation, waiting for my rules to be met. And then what I did is I just started taking pictures. What did market flow do at this termination condition? What was my bar pattern when the conditions started to change? And it just kind of soaks in. But if you only focus on confirmation, the other stuff tends to hit your brain through osmosis a little bit. Awesome. And take pictures, post them in class. Let's have conversations about everything that you want to know. It doesn't have to be high probability trend trades all the time. All right, Gary had a question on divergence. So, Gary, are you with me? There's two ways to do it. The first way is to do the techie one. Click for example from the glossary. Divergence is best defined for me as a loss of momentum. This is the tech side, guys. Divergence is true when the indicator, the MACD BBs in the background, you don't even see them. It's written into the software. These are trending up, which is a momentum indicator, while price is trending down. There is a divergence between the two, a disagreement. So when MACD BBs trend up and price trends down, we get that pivot. Divergence is true. It means that there was a loss of momentum at the time of the pivot. That's the first look at divergence. I like to use termination conditions to really understand what it means to me. So let me take a picture. What is divergence? So first, let's define it. Divergence is the loss of momentum. It's all you really need to know. So what does that mean? Let's use some arrows. Price pulls all the way down and heads back up. What's going to be easy to see? That's your momentum, Gary. Momentum doesn't follow. It lets you know that there's a slowdown in momentum when this negative number prints. If you see it again, there's another loss of momentum. Typically, when you get that third loss of momentum, things start to change. This is why when we identify divergence in a medium probability trade, we know that the trade is beginning to lose steam in the direction that we've taken it. When we get that third loss of momentum and anything can happen, absolutely. So divergence is potential until it prints. So right now on your 13.2, there is potential for a lower divergence. But until this negative number becomes a printed line, it's only potential. And you may find yourself with potential for divergence over a 50-point move. But in regards to a 50-50, let me see if I can find your picture again. And maybe this will help you out a little bit. Dun, dun, dun. This divergence printed on the third bar. So when I'm looking at this happening, let me find your picture. You have every advantage. You have a limit order waiting. If your rule says don't take it with divergence or wait for a market flow signal, when this negative number becomes true on the third bar, Gary, that's where I cancel out this order. I say, you know what? Now I'm going to wait for a market flow signal. And you never really got one here, which happens sometimes. If it was the same situation down here, there was your market flow signal for a long. There was your market flow signal for a long. So what I do, if my rules say wait for a market flow signal if divergence is true, I may have my limit order just waiting already. But the moment that's true, I have to get rid of it. And I have to wait for that market flow signal to get me in. And it means sometimes I'm going to miss a trade because I never got confirmation. Does that make sense? Gary, you're at a point with your chart reading where you say I have odds favorable. It's coming from a bad bottom. There's plenty of room to the target. Smalls are well outside of the large. Everything is up. Everything is strong. I have odds favorable momentum on every chart, and everything says up. And I have one loss of momentum against me on the 5-1 with strong triggers. If this were a bar fight, Gary, if this were 15 Navy men against the captain of the chess club, you're okay taking that fight. Right? Does that make sense? You had so much in favor that I love this trade, and you knew that, and you may not even known that you recognized all those strengths. But it becomes a beautiful trade. But the whole thing that sparked this up is if divergence prints, you're saying that you need a market flow signal. So I'm just trying to fish a little bit, get you there for consistency, and keep you true to your plan. So you may end up rewording what you have. If I have 10 reasons for and 1 divergence, I'm cool with that. And that's what more experienced traders tend to do. If I have so many reasons up and only 1 against, you just took it off of your... This was not a market flow signal. Gary, this was just a reversal bar. So again, if we go back to market flow signals defined, here, we'll just do this picture first. It has to be an arrow generated. So you're asking the green arrow? So there's a green arrow here, and there's a green arrow here. If your rules were true at the HVA line, if your rules were true for an HVA trade, absolutely, that's a signal. If this is in the middle of space, none of your rules are met, it's not a signal. It's just a market flow reversal bar with a green arrow underneath it. Does that make sense? So for this trade, at 76.20, you would have been looking for a bar very much like this one to have you enter the trade if you were waiting for a signal. But then once again, I'm going to put it in there. Your chart reading tells you that you have a better chance of success than failure in this trade. So as you grow with the software, as you become more comfortable and your chart reading becomes second nature, and Gary, you're a pretty outstanding chart reader, you recognized all of these advantages. You took the trade right there at the area. So let the language in your plan reflect that. If I have twice as many advantages and disadvantages, I'm willing to take that risk on an area that isn't broken. Everything has to be calculated, right? No, because what if there's a fib just above it? What if there's ones just below it? Where do you take it? Why not keep it area of support inside of favorable large triggers? The more you read charts, the more people try to add to their rules, the more people say, man, if 3 rules is good, 15 must be better, right? If 1 condition being met is solid, what if I make it work 20 conditions? Well, what happens is you end up breaking a lot of rules. And a lot of the rules maybe aren't as necessary. So keep it simple. And I think that the rules are pretty good. An area of support inside of favorable large triggers. On this case, Gary, you only had 1 area, right? Support was below it. You had 1 area, 1 spot for entry. You took it at the best of the best. Your risk was virtually nothing. You got out at the first trouble spot, and then you let a couple run to that next one. And that's it. The longer your checklist is, the fewer trades you end up taking. Because you have to go through and you have to figure all this stuff out. And I'm not knocking big checklists. But I love if it stems from here. And then there has to be a level of study, guys. There has to be a level of study and confidence in your chart reading where you say, this is my checklist. All right, here's my situational exception. On 50-50, no divergence. Done. And this goes into that medium probability. And if you take a look at John Novak's checklists, and Gary, I know that this is where, absolutely, this is where you kind of got yours from, right? It all starts with this. It all starts with that basic look, and then he has one of each. On 50-50 trades, no divergence is present, okay to enter at the areas. 50-50 trades with divergence present, use a market flow signal. If this is your plan, stick to your plan. Because it had to become your plan because the plan works, right? So why muddy the plan? If this brings you a set of trades that wins more than it loses, why mess with it? Take it as the plan presents itself. It's when people say, yeah, I had kind of odds favorable momentum, but not really. Could you do this? Smalls are beginning to accelerate down. We've cleared all of the areas. Smalls are outside of the large. And most people do fill out the checklist after the trade. But what has to happen, Gary, and this is especially for you new people, please, 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 you have to be so comfortable with your rules through repetition that you know exactly what that checklist says, and you know exactly whether or not your checklist is met the second you look at the charts. Here I see a medium probability trade. I see smalls beginning to break out. I see no termination conditions. I see no divergence potential on a pullback to an area inside of favorable large triggers. Guys, this is a trade that needs to be managed assertively because I don't have odds favorable momentum, but I know exactly through study and repetition that this is a trade that gives me an advantage. And if I'm uncomfortable with that loss of momentum, maybe I say, I want a market flow signal to get me into the trade. Which means that right here at my best of the best area, market flow has to tell me that it's happening. Does that make sense? Did you see how quickly I ran through everything that has to happen for me to take a trade? And how come I can do that? Because I've taken the time to study, I've taken the pictures, I've gotten the feedback. Guys, I know exactly what I'm looking for. When I have odds favorable momentum, I may have a limit order waiting 10 minutes before it even comes in. And I might keep dropping that as the conditions change, as the market moves. And then I hit a termination condition and I'm like, dadgummit, I don't have a trade. So Tim, this one's for you. If we get a pullback to the area of resistance inside of favorable large triggers, let's see if market flow gives us a signal there. Just for you guys that are learning to use it for confirmation. We've given up the advantage of momentum, right? Not our best trigger look. We've reached our area of resistance inside of favorable large triggers. This is where we may use it for confirmation. Because it's not a high probability trend trade. Guys, if the smalls were screaming outside of the large, you couldn't pay me not to be in at this mid-band. Because my rules would be met 100%. But now I come into a medium probability trade. If I get a pullback and a market flow signal, perhaps I'll enter this trade. Because those 1-to-1s at 53 are likely to stop the market, aren't they? Every trigger line below. Are you guys with me so far on this? But with this loss of momentum, isn't there the potential that the market may decide to push up to this higher area? We don't know. I'm not in control. All I know is that I can begin to make decisions based on what I see. The trigger lines are down. There's one area. The smalls aren't wide outside. The smalls aren't wide outside. I'm going to say, you know what? Market flow can be my tiebreaker. I'll let market flow tell me if I want to take a shot at this one without odds favorable momentum. And the same can be true. Well, we didn't get a signal, did we? The same can be true as I might say, this is kind of fun, if my 21.3 has odds favorable momentum and my 13.2 doesn't have the absolute best of the best look, well, not there yet. Maybe if I get a market signal at 55.44, Tim, you would look for either a reversal bar, the yellow reversal bar. You would look for an antenna bar. And an antenna bar has a small body and the high volume area is broken away from that body. Or you would look for that magenta signal. Look for on the top. Does that make sense? So guys, your high probability trend trade isn't happening because you don't have odds favorable momentum. Your medium probability trade may not have happened because you didn't get a market flow signal. And then the next trade that potentially happens is what we call an edge trade, where we identify on our highest time frame, the 21.3, with odds favorable momentum, where that market has the potential to turn. And if it drops here like a ton of bricks, well then guys, your rules weren't met. You have to be okay with that. Does that make sense? Awesome. Absolutely. Gary, you're going to keep learning stuff every day. You like coming the day after John teaches too? Guys, I try to incorporate everything that John talks about into my lessons because his chart reading is phenomenal. His ability to read indicators, to look for advantages is incredible. And to say that I have an enormous amount of respect for what he does would be an understatement. But what we do in this class is we're going to talk about that chart reading. And I love this because your 13.2 said that it wasn't odds favorable. Your 5.1 had a good spot. Your market flow never confirmed it. So then the next trade that you're looking for is that continuation. And one of the things that John's talked about a lot is if it comes up to this area, let these small triggers roll. Let us know. We'll look for an opportunity. Guys, John's advanced. He is. Gosh, and he's got everybody's best interest in mind for sure. I had a neighbor once. Guys, I used to be a motorcycle mechanic. I had a neighbor once that needed help cleaning his carburetor on his Harley. And that was something that was very second nature for me. It was very easy for me to pull a carburetor off of a motorcycle to clean it. So rather than just do it for him, I told him, I said, man, just take off these two bolts, get rid of your air cleaner. You're going to open up the bottom, adjust your floats, pull out those jets, and go. And he looked at me like I was talking a different language. And that's one of the things that when you become very comfortable with something, it happens now and then. So I try to, and I'm very fortunate because I started this at ground zero. I haven't had 25 years. We say the exact same thing in a different voice, and everybody hears the voice that suits them the best. So, guys, I'm going to take just a minute here. I'm going to go refill my water. We're going to see what happens. Let's watch this one. But keep those great questions coming. Keep those great questions coming because you guys are making me a much better trader today. You're making me answer questions that I don't normally get to answer, and I sure do appreciate that. I'll be back in just a few, guys. All right, guys, I'm back. Um, so that loss of momentum pushed us right up to that spot, didn't it? That exact same spot that when we looked at the 21.3, remember, all we're doing is chart reading. Close the gap right to the large triggers. Not saying that there was a short trade to be had there, but with the understanding of this expectation, with the loss of momentum, maybe it kept us out of this short, right? No market flow signal to get you there. If you were waiting for a market flow signal on an edge, well, there was one. Nope, there wasn't. That's technically not a bar. Remember we said we'd let the triggers roll and look for that continuation. So it was a lot of great chart reading going on, guys. Remember that 90% of what we do is going to be reading this chart, waiting for the advantages, waiting for the market to tell us that it's time to take a trade, that we have everything in our favor and it's time to take a trade. It means sometimes you just have to sit on your hands and wait for the absolute best of the best. But ultimately, our goal, your goal, should be to make money, should be to take trades that always give you the best chance. That loss of momentum was a great indication, guys. Now what do we have going on? We have smalls above the large are wide. They're angled in the direction of the trend. All of my trigger lines are up, coming up with strength. This is where we look at, is there divergence potential on the 5-1? Is there not? Do I have enough reasons to activate a limit order? Do I have my rules met to activate a limit order on a 50-50 looking for the opportunity to make it up to that next level? Tim, you said you need a primer on steps to go live, have a ninja account, haven't traded it live, or know how to set that section up. Also want info on the program that John suggests for new traders. Gary stepping in, thank you. Tim, the affiliate programs are listed on the website. Go look at them. There's 3. Tim, you tested me. You lost on that short. I told you, let those markets slow down, guys. When it's up strong, there's just no reason. That's okay, though. You're not live. You learned a lesson. So, Tim, take a picture of it. Annotate what went wrong. Let's talk about it. Maybe there's some great lessons in there, and we can avoid those mistakes again. Hey, Jeremy, you have a question on a trade. You kept getting caught and wanted my input. Let's take a look at it. Do you understand pivot from nowhere, but can go to the mid-band on the 13.2, but when there's a fib in the way, I never know if it stops at the fib or going to the mid-band. Anything to help figure this out? Let me look at your picture, and we'll take a look. So what are we looking at? Your 21.3 says up with an awful lot of strength, right? Your 13.2 says losing momentum. Your 5-1 confirms that momentum loss. Jeremy, this is one that I like. And let's talk about it just on... Let me see if I can get the 3 in there. I think we can agree that everything says up, right? Is it going to happen from the fib, or is it going to happen from the mid-band? We don't know. The reality is we don't know, but let's look at what happens. I have a loss of momentum, so there's one. I have smalls inside of the large, letting me know that the momentum is dying, and then I also have divergence. So Jeremy, the way my brain works, and I hope that this helps you a little bit, is that if I'm losing momentum, and I'm losing momentum, and what's going on over here when we have it? And I had a divergence print on this 8 range, if you're using the 8 range as well. I have 3 reasons to tell me that there's a slowdown. And if I'm going to take those 3 reasons telling me that there's a slowdown, and you're asking yourself, because I know you're a little more advanced, is it going to be a mid-band? Is it going to be fibs? Well, here's your range between fibs and mid-bands right there, 70.46. So if you're trading that 13.2 looking for opportunities, you can take your window of opportunity on the 13.2 and extend it to your 5.1. You can also extend it to your 8 range. Are you with me so far? Losing momentum, losing momentum, losing momentum. I prefer when there's these losses of momentum, it has a better chance. It's not guaranteed. It has a better chance to get to that lower end of the spectrum, right? Because we've lost momentum everywhere. The reason we get in at the highest point is because we have odds favorable. So Jeremy, if you wanted to insist on a market flow signal at the top of the spectrum, nothing wrong with that. And then if you don't get that market flow signal at the top of the spectrum, looking for an opportunity at the bottom. Maybe a market flow signal, not fighting these triggers. So I always like to remind people, and I'm going to try not to talk too much on this, and I think that we forget about this sometimes. The reason we look for the top of the range is because we have odds favorable momentum, because there is no slowdown anywhere. It doesn't make sense with so many forces pushing up that it's going to push down deep. Same example. We'll see where this one pushes to. This is a 50-50, right? Smalls are through, large are not, no divergence. I've got a window of opportunity. With odds favorable momentum, the pushback is typically smaller. When you start to lose the momentum, the pushback typically goes a little deeper. Good. I hope that helped. I think that a lot of times when you get caught up in the moment, you forget that it's that odds favorable momentum that gets us in at the top of the range, because that's the most likely spot. Gary, terminations. I love this look, right? Resistance, 3 divergences, another divergence on the top. Everything rolls. There's your HVA. And then you're following that checklist. If the target's reached, cancel the trade, and you're identifying that that termination condition has in fact been reached. Great job, great checklist. Awesome chart reading on that one. So what does a 50-50 trade mean? A 50-50 trade means that the area has the potential to break, but it has not. Everybody with me on that? How many areas haven't broken yet? 1, 2, 3, 4. 4 areas haven't broken yet. Guys, this is where, Tim, you were asking about that 21. 21 doesn't give any help for momentum up, does it? Elvis, take care. And the other side of that is the 21 hasn't come from a good top, right? It doesn't necessarily say stay away from longs, but what it says is not from a good top. We have a mid-band that held, small triggers that are coming up. There's no help from a momentum standpoint, but we do know that the market loves to make that key area, and we're seeing that pattern happen right now. But it's against 3 divergences, 50-50 trades. It's not as clear as it could be. I could make a case either direction, so this is where I have to refer to my rules. Not a great top, mid-band held, smalls coming up, larger above this area of support on the 21. Beautiful area on my 5-1. Great area on my 13 to potentially finish the move. Let's see what it does. We can see if the market continues those patterns that we see so often. And it was a 50-50 without divergence. So a lot of people will say, you know what? That's my trade. There's that termination condition that Gary pointed out to us. I love it. Market's pushing down. If then, right? If these small triggers start to break through, these begin to trend one on top of the other, we'll start looking for opportunities for short. Rules will be met for shorts. That's what I said, John. I gave both sides. I said exactly what you said, so that's kind of nice, isn't it? John and I are reading it the exact same way. When you come through on the ES, I know, right? What does the 21 say? Exactly what we just talked about. There's a mid-band that held, triggers above, small's coming up. We'll see if it finishes the move. 66.75 becomes the first trouble spot, and then there's your next key area. It's just chart reading, but until you're very comfortable reading charts, different words, same point, that's it. And Tim, that's the best part. And I think that it's great because John and I read charts exactly the same in a different voice because he's got me by 23 years. But I've learned to read my charts through him. And I'm trying to teach you guys the exact same thing. So now we're just in a holding pattern, right? Let's see if we get to one of those areas inside. If divergence prints, should we go through and look for a market flow signal again? Continue that process? Wifey says lunch. Awesome. Enjoy your lunch, Ron. Thanks for being here today, and thanks for posting. We will see you tomorrow. So let's go through the process again for you guys wondering about market flow. Where's our area? And we're looking for market flow signal from the area that the market comes back to, our window of opportunity. Tim, it goes into that there's two ways to read this. I'm going to show you everything that I see on this chart. And remember that this is an extremely broad stroke of a brush, right? So let's label what we see. It's a bad top. So what's the expectation on a bad top sometimes? The market may push all the way down to that mid-band and continue to the move to the key area. Is everybody comfortable with that concept? When the market doesn't quite finish a move, very often that mid-band becomes the turnaround point to get to the next area. It's not guaranteed, but it does give you something to think about, and it happens a lot on the 13.2 as well. In the moment, mid-band reached. So I see this. I see that it got exactly where patterns tell me, right? Exactly. Dave B, not a great top because it didn't reach that key area. And guys, look at this. Where are your large triggers? John gave a great lesson on this one over a couple days. Those trigger lines are still above, and now your small triggers are up strong, breaking support. So, based on pattern recognition, trigger line location, first targets, we can say the market has the potential to move up, but my 13.2 Doesn't tell me that it's happening yet. So I go down to a smaller chart, to a smaller time frame. What does my 5-1 tell me? Or my 13-2 tell me? Well, my 13-2 tells me that I had divergence from the bottom, that I have odds favorable momentum, that my large triggers are coming up strong like a shark, but I'm at a 50-50. So let's bring it down another level. At that 50-50, from a market that has the potential to go up, do I have an area for entry inside of favorable large triggers with odds favorable momentum on a 50-50? And the answer is without a dot yet, yes. I have a mid-band, I have 1-to-1s, and I have fibs. And then I have to ask myself, well, if I don't have odds favorable on the 21 and it's a 50-50 on the 13-2, if this divergence prints on the 5-1, can I utilize that market chart, that market flow chart, to look for an area for entry to confirm that I have a better shot of this market going up? It's kind of like trickle down. Start huge. What's the general temperature of the market? Well, the general temperature of the market is that we have the potential to finish the move, that the small triggers are pushing, that the large are above support. 13-2 confirms that up is probably the most likely direction for now. 5-1 supports it. 8 range supports it. It may not give us an opportunity. But if it does give us an opportunity, can't we identify without question where that market is most likely to continue to the upside? It is. It'll be on the live. When I'm done with this classroom and I hit it, Tim, everything that we do every day, if you go to the Nexgen YouTube page, let me give that to you. And I love this because sometimes people have epiphanies in class. They have these great aha moments. If you go to the live, they're all there. I mean, since the beginning. Well, I don't use it much, but I'll come to this channel. And the cool thing is if you go back a little bit, John Novak CEO live room from the 6th. You can take these kind of simple lessons that I give and go get the more advanced version from John. John says the exact same thing, but he'll give you more to think about. So now we continue up, right? That 50-50 is looking better and better. Those large triggers are coming up strong. My window of opportunity is getting a little bit smaller. Mid-band to 1-to-1s with everything saying up in a market that has the potential to go to that next key area, 68.56. And you finally have the green background on the 21.3. And what is that doing, Tim? That's confirming a little bit that this market's trying to give that push up to the next key area. So now we see that push. Remember John said X marks the spot? Have you seen that on the continuation trades? Those little momentum off the bottom? Odds favorable, Tim, right? Haven't reached a fib. Window of opportunity. Is it really too late? What do your rules say? My rules say that if they're nice enough to give me a pullback to an area inside of favorable large triggers, then I'm in a pretty good spot. There's my window. So once again, if divergence prints, I may say I have enough reasons for this thing to go up that I'll take it from the highest point. Or I may say that I want a market flow signal. But look at this, right at 58, I have a high volume area that helps support this trade as well. Odds favorable, odds favorable, odds favorable, stacked areas, window of opportunity, window of opportunity. Tim, there's going to be times where you may wait 10 minutes for a trade. waiting for a pullback. It doesn't mean that it's not coming. The market is a fight. Buyers and sellers, that's all it is. Sellers pushed us down, lost momentum, and the buyers pushed it up right to that key area. Do you notice how much the market slows down at key areas? Have you ever seen that? Have you ever seen how much your 5-1 dances at key areas? Guys, that's a fight between buyers and sellers. Nexgen users, you have the advantage of recognition, not only through pattern, but through trigger lines, of recognizing who's got the best potential to win that fight. If your 21.3 says up, if your 13.2 says up, if your 5.1 says up, and every trigger is strong, who do you suppose has the advantage? All those tails you circle at termination conditions? Sometimes. Then maybe that's not your trade. So we're going to watch this one pan out, guys. Live market. I love this stuff. Not all. So, Tim, your job is to not miss the ones that aren't at termination conditions, right? It makes it easier to sit patiently through the ones that are and not take them. So we got a reversal bar. And divergence prints. What do your rules say? Do your rules say, you know what? I'll take it anyway from the top because of the momentum? Do your rules say I'm willing to miss it and I'll only take it from the bottom? Or do your rules say cancel that order and let's wait for market flow confirmation? And guys, market flow confirmation is going to cost you a few ticks. So let's see what happens. I'm going to pretend that I have to have market flow confirmation. This is just all hypothetical. Everybody has a different plan. There's the top of your window. Here we go. We just reached the top of the window of opportunity, right? I don't see a move to the bottom of the large triggers. Window of opportunity, right? 50-50, divergence prints, 59 is your top. Yes, but it was sweaty, Ed. One-to-ones, right at the bottom of those large triggers. My window of opportunity is my highest point of support to my lowest point of support. So far, market flow hasn't given me an indication that this is my spot. All right, we push through the mid-band. Market flow hasn't said. It's a 50-50 with divergence printing. HVA, pivot stop out. I taught you to abandon. Tim, I should have taught you to study and recognize when you have the best of the best. So this is a medium probability trade, which means that an issue exists, which means that if you take it, what do we have to do? Manage assertively, right? Market flow hasn't said anything yet, if that's what you're waiting for. Look how it's stalled out. Guys, they're making decisions. The fight's going on. Has anyone ever tried to anticipate a market flow signal only to get run over? I have. More times than I care to mention. All right, there's a market flow signal, which means that that's probably your entry, which means that your stop is going to go below that reversal bar on market flow, 2 ticks. This is your trade, guys. If you're doing it. Where's my first trouble spot? Probably right there at 63. And then based off of that, where's my second profit point? Probably right up there. So I got market flow confirmation. I'm not guaranteed for a win, not at all. But I've waited for confirmation on a 50-50 with odds favorable on every chart. I've got my first profit target at my trouble point. Do you guys want to do the mechanical approach? If we're in at 60, first profit target, $100, 62. Second profit target, 64. Let's keep it mechanical. My stop has been moved below the window of opportunity. Because I used market flow for confirmation, my stop is below the market flow signal that got me into the market. I'm not going to move my stop again until it's either hit or my first target is hit. Are you guys with me on this so far? We're keeping it very mechanical. Entry price, stop position, first target, second target. Give me a Y in the room if you're with me. This is the mechanical approach from that example plan. We can lose that one. We don't need that anymore. I'll stretch this one out so it doesn't look so crowded. Where do we need to get, guys? We need to get to 62 in order to move our stop where? To break even? What happens if divergence prints again on a 50-50? A lower divergence on a 50-50? Is that a reason to exit a trade? All right, Ed. If this divergence prints, oh, look at that. Boom. Guys, your first profit target was just hit. You're now break even. There's $100 in the bank. The worst case scenario is that you pay for commissions. Second profit target is at 64. We're not touching a darn thing. We're either out break even on the second contract or it's a $300 trade. This is the most basic form of management that I know. Is this helping anybody? We're walking through this 100%. You've already banked $100. Congratulations, your P&L is up. You're break even. You can't lose. That gives me the confidence to just sit here and do nothing, right? Who cares if it hits my stop? I've already got money in the bank. I've got odds favorable momentum. When you grow with the software, your plan may change. You may say, hell no, I already got paid. I can't lose. I'm waiting for the second fib. We're not going to do that, though. We're going to keep it right here. And this is where I take my hands off the mouse and I roll my chair 6 feet back from my monitor. Because I'm not going to let my brain mess with me. I'm not going to let my brain convince me that things are going wrong. Guys, what direction are your 13-2 triggers right now? They're up. What's the momentum on my 13-2 chart? It's strong. What direction are the triggers on my 5-1 facing? Every one of them is up. Is there anything in the world that tells me to mess with stops? Is there anything that tells me to mess with targets? Keep it mechanical in the beginning, guys. You had the advantages, you got confirmation. Imagine if this trade came from 59.50 at the mid-band, or it came from this pivot stop out at 58.50. Guys, you already made $300. But this is that second tier. This is that market flow confirmation to get into a trade. Guys, you're out of the trade. It just hit your stop. You're out of the trade. You made $100. And now you're just waiting for next. If you got in at the pivot stop out, your break even down here, because you're a little more advanced trader, and your profit target's up at 68 because you're a little more advanced trader. But if you're brand new, doesn't it feel good to make $100? Absolutely, Ed. Doesn't it feel good to take a trade where you had advantages? Doesn't it feel good to be able to read your indicators in the moment and make pragmatic decisions about what you should do? Guys, every chart says that this one's going to the next area. Every chart. If you're identifying your first trouble spot, 63.25 is your first trouble spot. So we start basic, we gain knowledge. Guys, that would have been my first profit target, 63.25. Nexgen Ben, let's see what you did. Here's your before, pre-trade. Absolutely love it. Strong triggers, PSO, perfect entry. And guys, let's talk about the expectation. When I get a divergence, my expectation is that it's going to take out that previous pivot. Nexgen Ben knew this. He entered the market right above that pivot stop out when every chart said up. Ben, I love that entry. Managed out for $1,000. Nothing wrong with that at all. Guys, there's your first trouble spot, right? Tim, it's just expectations based on study and pattern recognition. Easy peasy. If I'm in here, guys, at this point on Ben's trade, I'm break even here. Actually, I'm probably 2 ticks below the reversal bar marker because if divergence is true, this is where it's coming. And my target is up at that next area. That's my profit target. This is a good profit target, right? This is your first trouble spot where half of your contracts probably come off. Does the 13.2 say that we're not making it up to here? Look at that 13.2. Anyone else singing Guns N' Roses, Loaded Like a Freight Train? Look at that thing go. And then for you guys that love expectations, you know 66.75 is your next trouble spot. You know that 68 and change is where that market's likely to go. But remember, this is a broad stroke. That's the one. You're welcome, Ben. If you got in at 59 and got out at the pivot stop out with 10 contracts at 63, that's a good looking trade too. Guys, I walked through this because I want you to know that you're in a constant state. You're not taking a trade and hoping. You're reading your indicators. What do my indicators say? In the beginning, that very conservative management plan nets you $100, but there's pictures to take. John waited for the market flow signal, got a great entry. First target at the PSO, and look at where his second target is. Chart reading, ladies and gentlemen. And he has absolutely nothing to lose on this trade. John, I love that. You just literally came in and posted the picture of everything that I just said. You guys just want to watch it, see if it makes it? 68 means you still have room for another try, as long as you have your conditions met, right? Rules met, rules not met, guys. Those are the only options. Embrace that. I love it. I love it when things... Tim, the 13.2 is at a termination. Price hasn't reached resistance, has it? I don't have a termination condition on my chart. If I come here and reach this fib, this line, Tim, is this fib. It's native to the 5-1. It's just a recognition piece for you guys here. With this much momentum and everything saying up, supported on all charts, you can be aware it's a great place maybe to potentially reduce risk. But your large chart area is 68.56. Do you see it? That's the same reason John Novak put a target up there and not at the first red line. Because when your red line doesn't extend all the way through, that's coming from a different time frame. I love it. Let me give you guys this. This was an epiphany for me too when he shared this. What do the fibs mean? It lets you know what's what. And there's John's 21.3. And that's why he's looking at that higher time frame. Doesn't always mean it makes it, right? Still have to read our indicators, and that's what I was going for on that, guys. You're in a constant state. What do my indicators say? I'm in a trade. What do my indicators say? What if I get divergence at a pivot stop out on a 50-50 trade? Would it be realistic to expect a deeper retracement? This goes back to Jeremy's question. If this divergence is true, it's the second loss of momentum. It also has small triggers inside of the large. If you're managing a trade, this lower push may take us down to this area. And we don't know for sure. But we can make educated decisions. Just take the trades and manage. It could come all the way back to 56 and then go up. Who knows? We don't. Guys, remember, our job isn't to catch every second of every move. Our job is to enter with the advantages and exit when those advantages go away. Your chart reading is going to help you identify when those advantages have been maintained. Your chart reading is going to help you identify when those advantages have gone away. So we'll see what happens. I think we had hit a pretty solid termination condition on crude oil, right? Resistance, resistance, divergence, divergence. Great spot for the market to potentially stop, but it's directly into support. Tim, let's see what you're doing. Oh, Tim, I think we got this one earlier. This is a repost. I'd say I'm always right, but my wife's in the room and she'll call me on that one. So guys, if you're still holding, divergence was never true, right? That divergence potential never came to fruition. And now there's a pivot to put a stop behind, reduce risk even more. All right, Tim, what's your area? Oh, you do have termination conditions. Yep. So, Tim, do you clean out your data every morning? I just rebuilt every one of my charts, clean data, everything. That's okay. And guys, I'm not saying that it isn't me, but everything that I do was done 100% fresh yesterday. Oops, wrong one. Here you go, guys. Do this afternoon. It's real easy. It takes just a minute. So Tim, NG time, do this one tonight. Delete everything, start fresh. We've got the new installers John just put up. And then every morning there is a section, Daily Computer Preparation for High Performance. I do this every day. I delete my cache and my tick. And then I use my Norton as well. I come through and I optimize my computer for the best performance. On the resources page, Tim, download the installer NinjaTrader 7 64-bit. This is going to have all the workspaces, all the templates, everything 100% brand new. The most recent, most current of everything. So clear out those folders, run this, run those installers, open up NinjaTrader 7, and build your workspace to look the way you want it to look. And it'll be great. Divergence never printed, did it? And that market continues up. Awesome. And if you wake up tomorrow, have any challenges, let me know. We'll walk through it. So guys, look, we're at a red line and that's scary. What does your 13.2 say? No changes to software, just changing the date. 13.2 says up, 13.2 says strong, 5.1 says up, 5.1 says strong, right? Everything's going up. We can identify that this is a potential turning point in the market. We don't know for sure, but in the moment, everything's pointing up. If you wanted to move a stop, you could right behind that little pivot, which means not only can you not lose, you make money on that second contract as well. All depends on how you manage. Management takes some time, guys. We build that management plan. Hey, Yuri. That was just a date from March of 21. Tim, what you'll find is that John doesn't really change anything because it doesn't need changing. That 21 date was giving someone their OCD a little bit of a tingle, so he changed them to 2023 on some of the what do you call it, the names. But it's all the same. Yuri, I like the idea behind this. Termination, momentum. There you go. There's the new chart templates. Yuri, your momentum trade coming off that top needed to be up here from these 1-to-1s. Not so much directly into the area of support that has the potential to hold. And then if it's momentum in, shouldn't it be momentum out? Divergence at an area that is a termination condition? A better entry would have given you a great push right down to that best of the best area. And now you're fighting a little bit. Does that make sense, Yuri? I like the momentum from up here, 55. Makes the trade a little more manageable. But when you have that great terminations, everything rolls. I know exactly why you did what you did. And guys, I just looked at my clock. I can't believe it's noon. Awesome. We survived the day. You took 49. Like it. John, you opted to take the money at 64.50. I like it. I like it, Yuri. Keep practicing. Keep posting. We'll have conversations about everything that you do each and every day, and we'll see what we can do to get you guys better. There's divergence right from it, right? John says, I'll just take the money. There are more fish in the sea, without a doubt. Guys, that's it for me. Thank you so much for being here today, guys. Thank you for all the great questions. Today was pretty awesome. Tim, you're very welcome. I like today's lessons. Remember, all we're going to do is we're going to compound every day. Notice how great class got when you guys started asking questions. Notice how we started hitting things that we don't normally hit. Keep those questions coming. I really do appreciate them. They make this class pretty spectacular. I will be back tomorrow. Yeah, they really were, NG. Tomorrow when I get here, we're going to go over rules in the morning. We're going to look at pictures. If you market replay tonight, take some pictures. Bring them to class tomorrow. If you had questions from today that you weren't sure about, post them in the room, and then we'll hit them tomorrow. But I will be back tomorrow, 9 a.m. Eastern. Gary, you're absolutely right. And that's why that repetition and practice pays dividends. Know your rules. Make sure that your trades always fit the rules. And then get that repetition. Gary, you're in a great spot. It's been fun watching you grow and continue to grow. Guys, I will see you tomorrow morning. The room is yours for the next 24 hours.